Hey, everybody. Welcome to the Sharpe Minds podcast. I am your host, Michael Lafata, and this week we have the fortune to spend time with Andrew Hall from First Trust. As Andrew can certainly speak to, First Trust is one of the leaders in the ETF world and most certainly one of the leaders in the advancement of thematic and buffered ETFs. We're going to do a deep dive into this world of ETFs along with the trends and the themes that surround them. We'll discuss what's driving the evolution of their growth, in addition to how they're changing the investment landscape with the quick adoption of thematic and sector-specific ETFs. We'll also spend some time discussing, how these themes are playing huge roles in the markets today. Themes such as AI, cybersecurity, etc. Andrew, greatly appreciate you spending the time with us today, and thank you for being here.
Absolutely. Yeah, Mike, thanks for having me. I'm looking forward to conversation.
Of course. So I'll give some more background on you, do a brief intro, and then we'll dive into it. All right. Awesome. So Andrew, you're a vice president and ETF strategist with First Trust. In that role, you provide in-depth analysis and commentary related to ETF investing. That includes tracking industry trends and communicating these ETF strategies to financial professionals like myself and my colleagues at Archstone. In addition to that, you contribute to the First Trust Investment Insights blog, and you author their quarterly Inside First Trust ETFs newsletter, which is super cool. So it's a pleasure to have you here. And once again, thank you for taking the time.
Yeah, absolutely. Yeah, it's good to, it's always good to, I know we talked about doing this in person, but it's always great that when it doesn't work out schedule-wise, we can do it virtually. So
of course,
glad to be here.
It's the beauty of technology today.
Yeah.
Is that we can do these things and not really miss a beat. It's fantastic. So why don't you, if you could, provide some more background on yourself, and then maybe a little bit on First Trust as well. For some folks who aren't too familiar with First Trust, would love to hear it from your perspective.
Sure. Yeah. So like you mentioned, I'm an ETF strategist at First Trust. I've been with the firm for about 10 years. Originally from Washington State, that's where I am today. It's where I live currently. I'm about 2 hours from Seattle in a place called Yakima, Washington, which most people haven't heard of. Small town, kind of south central Washington. But I do travel quite a bit in my role at First Trust as an ETF strategist. So I mean, there's a lot to cover, but First Trust, many clients haven't heard of First Trust. Our official name is First Trust Portfolios. We are headquartered just outside of Chicago, in the western suburbs in Wheaton, Illinois. And we were founded back in 1991 as an asset manager. Today, we manage over $200 billion. Our ETF lineup is what we're, I think, most known for today, even though we really started as a unit investment trust shop. Our ETF business is the largest at First Trust, and we have almost 200 billion in assets among our ETFs. I think we have about 275 different exchange traded funds at First Trust today. So a lot of different strategies available to financial professionals and investors. And really, I think what sets First Trust apart is we really focus on the financial professional. So you won't ever see us advertising, during a football game or something. You'll never see an advertisement for First Trust. Really, because we focus on financial professionals and providing not only resources and commentary, but also unique strategies that individuals like you can take to clients and build those portfolios. So in my role as an ETF strategist, like I said, I've been with the firm total for about 10 years. I actually started working for our chief economist, Brian Westbury, who's kind of the rock star at First Trust, I guess. He's on Fox Business all the time. But yeah, I started off working for him as an economic analyst for about 4 years. And then now today I'm an ETF strategist. So I work in our research group technically, do all kinds of things. So it's really, I like to think of my role at First Trust now as an ETF strategist is kind of taking some of those macro views from Brian Westbury and his team, from our chief investment officer, from our investment committee, and kind of funneling those views through those 275 different ETFs
Yep.
and kind of highlighting our top strategies for going forward for the next year or whatever the time frame may be. So it's communicating those strategies that we're highlighting not only to our sales team, but also to financial professionals like your team and ultimately to end clients. We typically don't talk a lot about products, with end clients, but we do talk about our investment case and our outlook quite often. So I travel quite a bit, speak on the road, communicating not only those strategies but also our outlook for clients. So it encompasses a lot, everything from speaking to writing to podcasting and all the rest. So
That's awesome.
It's great.
How is it like working for Westbury?
He's awesome. Yeah, he's a great guy.
Yeah.
I mean, he's really, I mean, he's brilliant first and foremost, but he's just really genuine. And he cares about you as an individual, and he always takes the team, golfing and things like that. So, but he was always and still is just really willing to teach. He's just a teacher, I think, first and foremost. He has a lot of knowledge and how he thinks about the world, and so he teaches that to not only people on TV, but also to the people that work for him. So yeah, he's a great guy. Yep.
I find it really interesting. Over the past, many years, right? He was extremely positive on markets, and some even considered him a perm bubble. And recently, over the past couple of years, he's kind of flipped, and he's not as positive as he used to be on markets, which now is, with everybody kind of on the same boat today, sort of where everything is today, it feels like everybody's sort of sitting on kind of the same side of the boat. It's interesting that he's not, and he talks about a lot of those same, a lot of what he talks about is going on with M2, how we've just printed money over the past couple of years, and it's just interesting to see that change from somebody who historically has had a really bullish stance.
Yeah, I think he and the team, they are optimists, and Brian in particular, he's an optimist at heart. So I think it pains him a bit to be pessimistic, but I think there's pretty good reasons to be, pessimistic. Like you said, he talks about the money supply growth, and to his team's credit, they were talking about the coming inflation all the way back in 2020 when M2, money supply started really exploding higher. And of course, that was the right call. We got, very high inflation, and we're still working our way back down to that 2% target. But yeah, I think, his philosophy is there was so much damage done to the economy during the pandemic because of lockdowns and some of the other policies. There has to be a price to be paid for that. And I think it's been pushed further out into the future as we've had all this stimulus, the monetary stimulus, the fiscal stimulus, but there's still that damage underneath the surface that ultimately we're going to see come to the forefront in potentially slower growth. So yeah, it is a weird place to be for sure for Brian, because he was, ever since the great financial crisis through 2020, was very optimistic and proved to be right. It was one crisis after another that the media would kind of point to, or politicians would say, this is the next thing that's going to take us down, take the economy down. And yet he remained steadfast in his conviction that we'd still see growth. And he was right for, almost 15 years or 10, 12 years there. Different. It's strange to be on the other side of the fence for sure today.
Yeah. When you're building out the strategies that you describe to advisors and investment professionals, do you weigh one side of it more heavily than the other? So, like, for example, do you take into consideration what Brian and his team are saying more heavily than what Dave McGarrell and his team are saying, or is it do they sort of have an equal split? How do you sort of manage the two sides of input that they provide?
Yeah, so David Garrell is our chief investment officer. He focuses on kind of that market strategy. Bob Carey, as well as our chief market strategist, and so they're very focused on the equity market in particular. Bill Housey is focused on the fixed income market, and Brian Westbury and his team focused on the macro economy. So Yeah, there haven't been a lot of times in the firm's history where views have really diverged. I think, and it's not like there's sort of this group think. Everybody has their different opinions, but kind of look, First Trust is kind of known for just looking at the data. What does the
Yep.
data say? If you've ever heard Jim Bowen, our CEO, talk, give a presentation, he's always
Yep.
very focused on what does the data say, and so because of that, because that's kind of the culture of our firm to, reject the narrative, just look at the data yourself. We don't often have splits of opinion, and usually we're pretty well aligned. There's, maybe minor differences here and there, but generally we're pretty well aligned as a firm because of that data focus. So that helps me, I guess, and my colleagues. Our job is easier where we don't have to kind of pick and choose between whose viewpoint we're going to take.
Right.
We haven't really run into that, which is good.
Right. That's awesome. That's good. It's great to have so many different inputs or different viewpoints to choose from when building an investment strategy. So that's the beauty about what you guys have done is you've taken, just at every spot, you guys have absolute rock stars that just have so much experience. They know exactly what they're talking about. And that's why, I think this is going to be awesome today because, there's just so much, data to your point, and just years and years of experience backing up, what you guys have done.
Yeah.
So it's awesome.
Yep.
Awesome. So let's dive into some of the ETF stuff a little bit. So I touched on it a little bit, at the open. But so ETFs are primarily what you guys have done. You also have done a lot in the UIT space. But today we'll focus on ETF stuff today. That's your specialty. The growth and evolution of that industry has been fascinating to watch and to participate in. From your point of view, what's been the most exciting part of following the space, and how do you think the space is set up today for to have good growth and evolution in the future?
Yeah, it is a fascinating industry to watch, and it's really neat to be sort of on the inside of an industry that's growing so rapidly. I
Yeah.
think maybe the most exciting thing for me watching is just the innovation that's taking place. Innovation in new products and different strategies, but also innovative ways in how financial professionals are using a lot of these strategies.
Yeah.
Sometimes we'll launch a strategy or a suite of different ETFs. And then we'll, down the road after a year or maybe just even a few months, we'll see how they're being implemented by financial professionals as we, travel, talk to them on the road, on the phone, and things like that. And it's pretty fascinating to see how they're being implemented. And
Right.
so, I think a lot of the growth, there's a lot of different things to talk about. Thematic, you mentioned, which is those narrow industries and themes, has really taken off as, financial advisors and financial professionals have, sort of built portfolios with a core equity allocation and then some satellite positions where you can have exposure to those high growth industries like AI or cloud computing or internet services, things like that. So that's really been fascinating to watch the thematic space grow. Another one that's really interesting that at First Trust we've actually kind of been a leader in for the last couple of decades has actually been actively managed ETFs.
Yep.
And all of our fixed income ETFs are actually actively managed. I think in particular in the fixed income space, it's just not as an efficient market. So portfolio managers, running an ETF, actively managing an ETF, are, I think, able to provide some benefits like, managing some of the credit risk, duration risk. And so not only that, but active ETFs in the equity space too have really taken off. One of the other areas of active that's really interesting, that's really grown. There's a couple, but one in particular I think you mentioned is the buffered or the target outcome ETFs. Those are basically option strategies that give you kind of synthetic exposure to an underlying asset like the S&P 500 or Russell 2000. Pick your sort of benchmark that you want exposure to, and it provides downside protection. And the trade-off being there's a bit of a cap on the upside. So
Right.
It's really this space has really exploded over the last 5 or 6 years. I think today at First Trust, we manage around 30 billion in these types of option strategies that give you that downside protection. And you can kind of choose whether it's 10 or 15 or 25% downside protection that you want. And of course, the cap on the upside is limited to more downside exposure.
Yep.
The downside, you're buffered, the lower your cap is on the upside. But those are all actively managed. We partner with a company called SIBO Vest to sort of sub-advise those or actively manage those funds. So yeah, there is a lot to talk about in the ETF space, but just seeing it mature and seeing all these fascinating strategies that, 20 years ago, the average investor really didn't have much capability of allocating to, whether it was to have a buffered or a target outcome strategy, you had to have a structured product,
Right.
which
Right.
have some other downsides. And really, the thematic space was very limited. When it was all mutual funds, mostly actively managed, there wasn't the plethora of different thematic strategies that we have today. So it's just great to be able to have that niche exposure and have it in that tax efficient, liquid, transparent vehicle that the ETF is.
Yeah. So let's take a couple steps back and talk about the stance of active. So traditionally, ETFs have been passively managed vehicles, and what that means for some listeners who may not know is it's sort of a set it and forget it, right? That's one way to think about it, right? You buy the S&P 500 index, and there's not much management that goes into that. You sort of leave it and you let it do its thing, and it tracks the S&P over time. And one of the benefits to ETFs, especially in the early stages, was the cost, right? The cost for that passive management was typically less than what a mutual fund would provide. And to your point now, we're experiencing this influx of actively managed ETFs, right? So a historically mutual fund focused strategy is now making its way into the ETF space, and you're allowed to do all these different things within the ETF wrapper, right? So yeah, there's the possibility of higher costs that comes along with that, but still that's negligible compared to many of the mutual funds out there. But it really gives the manager of the ETF the flexibility to manage the portfolio how they want, right? You still have to stay within certain parameters, and follow the guidelines of what the ETF has set out to do. But the actively managed piece of it is fantastic, and has really given managers the ability to to overachieve and implement all these different strategies within an ETF wrapper.
Yeah, I'd say too, when you think about active in the equity space in particular, there's been a lot of studies, actively managed strategies in the equity space have kind of been disparaged, I guess you could say,
Right.
in the media, over the years. All these studies how the active managers underperform. That's true in the active mutual fund space where costs are much higher. But like you mentioned, in the ETF space, it's very competitive. Costs are much lower to not only run an ETF, but bring it to market and things like that. So the administrative costs, it's just more efficient to run an ETF. And so the active equity ETF space is a little bit different ballgame, and especially when you think about the market environment that we're in today. The S&P 500 is incredibly concentrated. I think Magnificent Seven account for 33% or so of the S&P 500. And so, if you're buying the S&P 500, yes, it's very inexpensive. There's, many of those strategies out there, they cost almost nothing. But you're also you're getting a relatively concentrated portfolio. And there's some risk inherent in that. When you have 7 stocks that account for 35 or 33% of a strategy, that's pretty high concentration. And so one of the ways actively managed ETFs, portfolio managers can manage some of that concentration risk, as well as maybe some of the factor exposures that look particularly attractive, whether it's, overweighting something like low volatility factor, or the dividend factor or small size factor, whatever the case may be. managing some of that risk, I think, especially in today's market, is really, in my opinion, probably a good idea given the concentration and just really the top heaviness and the valuations in something like the S&P 500 today. So
Right, right. A huge benefit is that you don't have to actively manage with the primary objective being outperformance, right? The primary objective could be diversification, could be low volatility to your point. And that also brings us to the evolution of this, which have been which have been the thematic ETFs. We've seen a huge over the past couple years, right, and more recently over the past couple weeks, right. You've seen a huge influx into the crypto ETF, or a huge. There's been an influx of new ETF applications. That's the word I was looking for, by all these companies, right, with hopes of the new administration having lower regulatory impact on the crypto space. But outside of that, it's AI, cybersecurity. You mentioned cloud computing, right? All these different parts of the market, all these themes driving earnings and capex, all these different things that companies are focusing on. You can now play a specific. They can now play a specific role in the portfolio, which is fantastic.
yeah, yeah, it's been fascinating to watch. I think it was just over a year ago, last January, when the first spot Bitcoin ETFs
Yep.
launched, and the approvals were just prior to that, and it really kind of opened the floodgates. I think I was looking at some of the numbers recently. I think spot Bitcoin ETFs have over $120 billion in assets. There's
It's wild.
over a dozen different just spot Bitcoin ETFs. And, I think 85% of assets are in just, three of those, but there's a whole bunch of them out there. Ethereum would be another one that now there's 9 or 10 different products, much fewer
Yep.
assets, but still there's ETFs that track that cryptocurrency as well. So we've really seen this surge in popularity after they were finally approved, and years of back and forth with the SEC and the issuers trying to get them across the finish line and assuage sort of the fears when it comes to Bitcoin ETFs. But what's amazing is we've seen the assets that flow into them. And so it's interesting that even something like that, that's a perfect example of the innovation going on in the ETF space, where if you had mentioned 15 years ago a spot Bitcoin ETF, you would have gotten a lot of blank stares, right? It wasn't even on the radar. Maybe 20 years ago, however long ago it was.
And you would have never imagined that one in particular, I'm not going to say the name, was the most successful product launch of all time.
Yeah, right.
You would
And
never think so.
yeah, exactly. And it traded perfectly, relatively close to in line with the underlying asset. And,
Yep.
it's, we haven't seen huge bouts of volatility yet, but, Bitcoin is inherently volatile. So it's
Mhm.
got a higher beta than, your average stock. But it's fascinating to watch. And that's just a perfect example of the innovation and the excitement and the growth of the ETF space has been the cryptocurrency area for sure.
Yeah. And then we've also seen that in certain certain places such as AI. AI has just exploded over the past 2 years primarily. But it's interesting. The other cool thing about ETFs is if you take a look at some of the top AI ETFs out there, or ETFs that proclaim to be AI focused, right? Some of them might have many of the same top couple holdings, but outside of that, right, the manager has the discretion to pick and choose whoever they think is viable in that space, right? Who they think the next big player could be, and that's a huge benefit to this actively managed ETF cohort that's growing so fast. Is that you can have the success from some of these companies that traditionally might not have been involved in a standard index-based ETF. So that's awesome.
Yeah, I'd say too, that's a perfect example. When we think about thematic investing or any ETFs in general, it is so important to look at the methodology because, um, the strategy, obviously every ETF has a ticker, it's got a name, and it might have artificial intelligence in the name, or there might be 10 different ETFs that have AI in the name, but the returns are vastly different. Your exposures are completely different. So it is really important, and I get to talk to financial professionals like yourself on a daily basis, kind of
Right.
explaining the strategy, the methodology of different ETFs every day. But it's so important to actually look at the methodology. If it's actively managed, it might be a little more difficult to determine how the portfolio manager is choosing stocks, but most ETFs are passively managed
Hmm.
today, or at least for sure most of the assets are passive in passive or index tracking ETFs. And so it's easy to just go on the website, look at the methodology, how it's defining the universe of stocks, what does the selection process look like? What is the weighting methodology? And yeah, I think it's just so important to look at even the holdings as well too, because a lot of especially in the thematic space, you'll see those top, semiconductor names, some of the Mag 7 stocks, right at the top of the portfolio. And so performance might look stellar, but is that the exposure you actually want? And
Hmm.
what's the overlap with, some of your core holdings? You already have
Exactly.
30% of your
Right.
core in the Mag 7 and you're just loading up on the same stock. So yeah, a little bit of a tangent, but I think it's so important to understand the methodology and look through at
Yeah.
the actual portfolio because you might not be getting what you think you are just based on a name.
Hmm. Yeah, and that brings up a larger issue. I guess issue. It's a really good thing, but also kind of an issue within the markets today. Is those top companies have become so good at doing so many different things that they fit into a bunch of different categories. So there's some of them. So, right. So you could look at an AI product, and they could be a top holding within that. Then you could look at a cloud computing, ETF. They could be a top holding in there. You look at an Internet of Things, right? They can be. So there is so much overlap, and it just speaks to this issue of how those companies have they've done such a good job of growing into their valuations and just becoming really, really, really well diversified businesses. But at the same time, for the sake of what we're discussing here, it's extremely important to understand, to your point, the objective of each fund and make sure you're actually getting that within there.
Yeah, sure. Just talking about the Mag 7, and they are absolutely incredible companies. I mean, some of the most innovative, high growth companies in the world for sure, in the history of the U.S. stock market. There's no doubt, and they are absolutely worth owning and tracking, and being excited about the new innovations and technologies. One of the things that concerns us at First Trust about the Mag 7 is not their business models, it's not their earnings growth, but it is definitely the valuations. They are very, very expensive companies. All of those new technologies that you mentioned and the excitement and hype is kind of priced into those stocks, and so they have really high hurdles to hit when it comes to earnings, when it comes to expectations from investors, adoption of some of these new technologies, shipments of chips and things like that. So it is, one thing to keep an eye on is valuations of those companies are very, very high.
Yep.
And it doesn't mean they can't stay high. It doesn't mean they can't go higher. But typically, when you see valuations at, 30, 40 times forward earnings, you want to kind of keep an eye on that and be, I guess, tread a little bit lightly, but that's not to say they're not worth owning and they're not amazing companies, but just the market has priced in a lot of good news, and so it
Right.
bears watching, I guess.
Right. Of course. Of course. Let's talk a little bit about AI specifically. Um, it's taken over the world over the past couple of years, right? Especially the financial world, the investing world. It's what everybody is so excited about. Um, from your perspective, right? When you're putting strategies in place, or you guys do a lot of analysis of these themes themselves, right? Tell us a little bit about, some of the stuff that um, you guys have learned about the AI space, some of what you guys are excited about. Dive into that a little bit.
Sure. Yeah. I mean, artificial intelligence is absolutely fascinating. It's certainly
Yeah.
compelling technology with generative AI in particular that's taken the world by storm over the last few years, and we think it has a long runway for growth for sure.
Yep.
There's use cases for this technology that are popping up every day. New use cases, how people are implementing things like ChatGPT, how other companies are implementing large language models into their legacy software and building from there. It is amazing, and I think it's one of those technologies, kind of like the internet was, maybe 30 years ago.
Hmm.
I think artificial intelligence is one of those technologies where we don't even know where it's going to go. We don't know what the use cases are going to be. You think 30 years ago, nobody would have envisioned things like TikTok or Instagram,
Right.
right? So
Right.
the social media that we have today that is everywhere and in everybody's pocket all the time, we couldn't have even imagined back then. I think it's going to be
Right.
kind of the same with artificial intelligence. What's interesting about it so far is I think the first leg of this wave of growth has really been on the computing side, right? Not the software, but the semiconductor names. I
Mhm.
think if you look at the semiconductor space, as a share of the tech sector, I think, semiconductors were maybe 15, 16% of the tech sector 5 years ago. Today, they're almost 40% of the
Yeah.
tech sector. So, tech has done very well in general over the last 5 years. Semiconductors have done even better, right?
Yeah.
That's how it's gained market share, among the tech sector. And so that's really been the trade so far, has been the computing side. I think there's potential for that to change. Very few companies outside of those chip companies have really monetized AI at this point, which is kind of the fascinating thing.
Mhm.
But I think we're going to start to see more software names, kind of starting to monetize these large language models going forward. And I think that could maybe be a shift or maybe the trade
Mhm.
in the future, because yeah, the first part, obviously, you have to get the infrastructure, you have to get the chips out there that just power these models, right? That do all the
Yep.
computing, the heavy lifting. And so that's where we've seen the growth. But I think there could be, from a market standpoint, maybe some more growth and more earnings on the software side going forward. But yeah, just back to the technology itself, we're big believers in it. Obviously, it has taken the world by storm, but I just think it's one of those things where we don't even know where it's going to go at this point.
Yeah. Yeah. It's super interesting. I mean, for the consumer though, or the individual, there's not much that's really available today, right? You have a lot of the LLMs, the chat GPTs, the other language models to do stuff with. And you have some companies, implementing it in, like Photoshop technology, or technology and stuff like that, which has been super cool. But for the most part, the consumer hasn't really even seen it's the tip of the iceberg with how much they have been, um, with how much of the stuff they've seen. Do you think that's going to continue to evolve as we go into 2025 and this stuff continues to uh, to um, to grow, or do you think we're still going to see it used primarily institutionally, and then it's going to take a little bit longer for it to work its way, to the consumer in meaningful ways?
Yeah, that's a good question. I think it'll be a little bit of the same for a while, but I think consumer adoption will definitely be there.
Hmm.
When you think about using some of these chatbots like ChatGPT, it's a new skill that we have to learn. We all, 30 years ago or however long, 25 years ago, we all had to learn how to use a Google search, Google search
Hmm.
bar, how to, kind of speak to just these, traditional search engines to get the
Yep.
results we need. I think, and with generative AI, prompting is the skill to, use these models that we all have to learn. It's kind of a new language. Yes, they understand natural human language much better than computers ever have, but being able to use these effectively really comes down to how good you are at prompting. And being able to be specific. If you use ChatGPT like a traditional Google search, it's not a very compelling product,
Right.
right? I mean,
Right.
if
Right.
you're just looking for links so you can go read the information yourself somewhere else, just use Google. But if you can, learn to prompt and learn to be very specific with the answers that you're looking for, the information you're trying to find, the format, etc., they can really be very powerful. So I think that's a
Yeah.
learning process that it's going to take consumers a while to figure out. But yeah, I think adoption will come for sure.
Right. Right. For the average person who's not too accustomed with it, there's really no benefit to using an LLM or a large language model compared to, just Google. Just use it for what the consumer needs today. It hasn't surpassed that, at least in my opinion, right? I do some, and I'm sure you do as well, some stuff that's a little bit more complex, and we can really sort of stretch its legs, so to speak. But it'll be interesting to see that evolve. I can't wait until one day I can just pull my phone out and tell it to book me a trip to, I don't know, anyway, you pick a place, Switzerland, book me a hotel, pay for the flights, do the whole thing, make some reservations, all in one thing. That'll be pretty cool when that's available.
Yeah, I think the future, if you listen to, some of the leaders in AI, what's interesting about where it's going is to what are called AI agents.
Yep.
So
Yep.
essentially AI will be able to, instead of just being siloed in a chat bot where you kind of get your information over here and then you use it over here in another program or platform or whatever. What's amazing about this technology and these AI agents is that essentially they'll be able to go all across your computer, whether it's receiving customer feedback or a request from a client, and then researching it using another platform over here, and then replying in an email, just the whole sort of sequence, a sort of chain of a workflow, if you will.
Yep.
That I think is what's next, according to the leaders and from Silicon Valley and AI, is that it will work across your entire network, your entire computer system, to accomplish tasks that we do on a daily basis. That'll be really fascinating, where you can kind of sit back, field email, you see an email come in, it will go research the information over here, and then it will send a reply automatically. I mean, that's pretty amazing, but I think that's kind of where some of it's already happening, but I think large scale adoption, I think that's where it's going. So that'll be fascinating.
Right. Do you guys have a view internally at First Trust about about the concept of AI taking jobs or replacing jobs? Do you guys have any opinions on that, or whether it's overblown, whether maybe people are underestimating the possibility of something like that? How do you guys view that?
Yeah, we don't really have a firm view on that, I guess, but speaking for myself, I have seen some of the estimates out there. I think the CEO of IBM famously said that I think he said this was maybe 2 years ago, but 30% of white collar, clerical jobs will be replaced or eliminated, or maybe he said disrupted by artificial intelligence in the next few
Mm-hmm.
years. That seems high to me. I think, we've seen these sort of step changes of technology in the past, whether it was the internet or going back further than that, telecom, the smartphone. Yeah, we've seen these sorts of step changes, and today we're at roughly full employment still. We're a much larger
Yep.
workforce. It's not like we have tons and tons of people displaced and they couldn't find a new job. I think people adapt to new technology. There's entire new industries that crop up because of things like the internet or the smartphone,
Right.
or 25 years ago we didn't have any app developers, right? Now there's millions of app developers. So technology just changes the workforce. It changes quite a bit, I think, for individuals that are disrupted. But I think we will see that disruption. Some of those kind of clerical, kind of mundane, white collar jobs that can be automated fairly easily. But
Mm-hmm.
again, I don't think it's going to be the case where we have just tons of people unemployed because of this. I
Right.
think people will simply find new jobs and develop new skills. So
Right. I tend to agree. I mean, I think the U.S. consumer, and I say this about companies in the U.S. all the time, right? When I'm having client conversations, I actually said it, yesterday. Companies in the S&P 500 in particular are really good at innovating and really good at adjusting, right? They're extremely good at it. Consumers are very good at it too. And I don't think they get enough credit for adjusting to what's going on in the world, and making the adjustments that they need to succeed, or that they need to grow with what's working in today's day and age. So I do agree with what you're saying, and I think as a society we will evolve. We will find ways to make more jobs out of a technology like this, right? I think I think app developers is a perfect analogy to refer to with it. I think we'll have something similar in the AI space, and it's going to be really, really interesting and fascinating to see that play out when it does.
Yeah, and I think too, most of us that have jobs, whether it's certainly white collar jobs, I think it's a tool we're going to implement into our workflow on a daily basis.
Right.
We might not know how in the next 5-10 years we'll be doing that, but I think
Exactly.
it's a tool that's gonna make us a lot more productive, which is a good thing. We'll be able to do that much more on a daily basis than we can today, and it's just a matter of kind of learning that and implementing that technology. But I think most of us will be using it. I think we already do in a lot of ways, whether we know it or not. we're
Hmm.
already using AI, but even more. I think we'll use it much more heavily even going forward.
Right. Right. That's a great point. Um, it all comes back to the fact, though, that and you touched on this, that these data centers, all these different infrastructure, build outs that we're doing to power this stuff needs to be powered itself. Um, what's your guys' viewpoint on that? Right, we've heard many companies have come out and said they're leading their own initiatives to find clean energy to power this stuff. Tell us. I know you guys wrote a paper recently, about how natural gas could play a huge role in this stuff. Why don't you can you touch on that a little bit?
Yeah, sure. I think we're kind of at first just we're kind of looking for the second order effects, if you
Yep.
will, of
Yep.
artificial intelligence. What are the industries that are going to be massively disrupted, or they're just going to see huge growth because of AI? Like I mentioned, AI so far has been heavily in the tech space. It's been the semiconductor trade. Maybe software is next. But as we go forward, there's other areas I think of opportunity for investors, and because of the energy needs of AI, there's a whole host of industries I think are going to benefit, and you touched on a couple of them, but basically it comes down to these new chips. One of
Yep.
the examples that we point to when it comes to energy usage and data centers
Yep.
is Dominion Energy. So they are the utility provider. They service kind of that Northern Virginia market. It's the highest concentration of data centers, I believe, in the world, but definitely in the US. And they just talked about how many, the last few years, they've essentially plugged in dozens of new data centers, with many, many more to come in the years ahead. And so these utility providers are scrambling to figure out where they're going to source power to, essentially plug in all these new data centers because of
Yep.
AI. So yeah, there's a couple different areas of opportunity we think that we've focused on at First Trust. First of all, is grid infrastructure. So companies and strategies in particular that are focused on companies in grid infrastructure. And this is kind of the poles and wires, or the picks and shovels, I guess, behind AI.
Hmm.
So companies that are maybe not necessarily generating power, but they're the ones that are building out the grid. So our grid infrastructure in a lot of ways is pretty old, pretty antiquated.
Yeah.
Hasn't really changed a lot in many areas over the last 100 years. And so with the advent of just these huge demands on energy usage, there just has to be a huge build out. And this is kind of a global phenomenon. One of the stats that Bloomberg has put out, I think they estimate that by 2050, so the next 25 years, something like $13 trillion has to be invested in the grid just to keep up with our
Crazy.
energy demands. Yeah,
Yeah.
it's pretty amazing. So grid infrastructure is one of those sort of second order opportunities we think investors can have exposure to the AI trade. Another one, like you mentioned, is natural gas. Natural gas we look at as kind of the most cost effective and one of the main beneficiaries from this energy boom. Most of the utility or the capacity additions to our grid have come from wind and solar, in particular solar, the last couple of years.
Yep.
Um, The problem with wind and solar is that they are intermittent sources of energy, right? So the sun's not always shining, the wind is not always blowing. When you're running a data center, you have to have 24/7 consistent,
Right.
reliable power. And so that's why we've seen, nuclear back on the table, part of the conversation the last couple of years. A lot of people didn't really like nuclear up until, this AI boom. And now, people are talking about nuclear again. In fact, the Constellation Energy is restarting the 3 Mile Island nuclear plant in Pennsylvania. And there's a lot of innovation going on around small modular reactors as well. But those, nuclear is very expensive. Obviously, there's a lot of regulatory hurdles. There's a long
Hmm.
time frame to install more nuclear capacity. And so we think natural gas is kind of a clear winner because it's reliable, it's relatively clean, it's inexpensive, and we have a massive amount of natural gas found, naturally in the U.S. And so
Yep.
a lot of the companies involved in natural gas, whether it's the pipeline operators or some of the utility providers, we think actually could benefit from this AI boom. So kind of one of those, another, I guess, second order industry that might benefit from AI. Natural
Hmm.
gas grid, I think we think make a lot of sense.
Interesting. Very interesting to see that. That's actually, it's actually one that I haven't heard yet. So I was reading the blog that you guys posted about it, and it's extremely fascinating to hear it from that perspective. The other one that that I know you have focused on a lot is this reshoring trend, right? So you hear it referred to as onshoring or reindustrialization. Let's dive into that a little bit. I know you guys have spent a lot of time analyzing that space, so would love to hear the viewpoints there.
Yeah, I think, this is I just love this theme for investors because, you think about how many growth strategies there are today. Many of them, like we've talked about, have high exposure to the Mag 7 or the semiconductor trade, the same tech stocks you already have. And so
Hmm.
companies involved in American industry, I think is a way off the radar sort of theme or growth strategy for investors, particularly those looking for ways to kind of diversify some of that growth.
Hmm.
And so, yeah, the reshoring trend, we look at it as a very, very long-term theme. We had, decades of globalization taking place, 80s, 90s, 2000s, and beyond. We kind of think the pendulum is swinging the other way towards a little bit of a deglobalization. And there's a lot of reasons for that. One of them that in particular cropped up during the pandemic was the supply chain issues.
Right.
There's still, that was, you think about all the factory shutdowns, the clogged ports and things like that. In a lot of ways, there's still a lot of shipping issues today with, the global or regional conflicts we have. There's a Red Sea shipping crisis today with all the attacks on commercial vessels. There's still a lot of supply chain issues out there. We also have trade protectionism. Yesterday was inauguration day for
Yep.
Donald Trump again for the second term. He obviously loves tariffs, and so companies involved in manufacturing domestically are probably the ones that are going to benefit from tariffs. But
Right.
this isn't just a Trump administration issue. In fact, a lot of the tariffs he enacted in his first presidency, in fact, pretty much all of them are still in place after 4 years of President Biden. And so protectionism is an ongoing, I think, theme for the next several years. And again, that's, I think, going to benefit American industry. And then finally, we still have all this legislation, things like the CHIPS Act, the Infrastructure Investment and Jobs Act, where there are hundreds of billions of dollars being awarded to companies for domestic manufacturing and industry. So yeah, the reshoring or onshoring, whatever you want to call it, it's, I think, a long-term theme, and I think a
Right.
great way for investors to get that off the beaten path sort of growth exposure.
Yeah. Yeah, I think a great example of that is I don't want to mention the particular company, but there's a very influential semiconductor company that has opened up a plant in Arizona, and they have started to mass produce chips there, and that's just a great example of what you're referring to, and how the U.S. is now, it seems like probably going to become, a place for, many of these companies to bring production to, or back to, and we're going to play a bigger role there than we have historically, which is awesome.
Yeah, I mean, yeah, the CHIPS Act is having a dramatic impact on U.S. chip manufacturing. I think there's
Hmm.
$50 billion under that piece of legislation that is total allocated to chip manufacturing. I think so far we've seen around 34, 35 billion awarded. So there's
Hmm.
still a lot to go. But what's amazing is if you look at, I believe it's the Census Bureau, they put out monthly statistics on construction spending. And the chart, if you ever get a chance to look at the chart, we published it on our blog, but the data just shows annual construction spending or the rate of growth going from, a couple, maybe $100 billion a year to
Yep.
200. I mean, it's more than doubled because of, in large part, the CHIPS Act, but some of these other trends too. So, yeah, there is a massive amount of money that's incentivizing these companies to invest here domestically. And I think, yeah, like you said, it is kind of a national security issue as well,
Hmm.
to have more of that manufacturing here in the U.S.
Yeah, 100%. That's awesome. I think that's a great place to sort of wrap it up, right? We've touched on so many different things, and we could certainly go in further depth on each one in particular. And when I see you in person next time, maybe that's something we can do. But let's sort of wrap up our discussion there. And one thing I like to always touch on when we finish up is something sort of funny is and intellectuals. I want you to, if you could, let's talk about like one thing throughout your career that that's sort of been influential to you, right? One thing that's stuck with you throughout your career, or something somebody said to you, maybe a quote. What comes to mind when when you think of something like that?
Yeah, that's a really good question. I think one of the things that long time ago, kind of, I think it's back in college, actually, a mentor of mine said, at the end of the day, all you have is your integrity. And so maybe not so, very much related to the business world, but also on a personal level. I think that's one thing I've tried to remember is that you only have one shot, right? You have
Yeah.
your integrity, and once it's gone, it's gone. So that's one thing that stuck with me from my college days. It was a professor I had that he always did kind of a beginning of class sort of pep talk or kind of rally for the class before we got into it. It was actually accounting. And so that's just one thing that stuck with me is yeah, at the end of the day, all you have is your integrity. And so guard that like your life depends on it. And so that's what I've tried to do. So we all
Oh
fail,
yeah,
but try.
that's awesome. I love that. I love that. That's a great way to finish up. So once again, thank you so much, Andrew. It's greatly appreciate you taking the time to share your insights with us. It's been a pleasure to hear what you guys have to say. As we touched on, you guys at First Trust, you guys cover so many different aspects of the market. You have so many different, viewpoints from such great people. So it's great to hear that all bundled up from you. So greatly appreciate you taking the time.
Absolutely, Mike. Yeah, thanks for having me on, and happy to do it anytime.
Of course, we'll definitely do it in person next time I see you. And for everybody out there listening, please tune in to we have shows coming out every week. So please feel free to like, subscribe on YouTube, and we'll see you in the next one. Thank you so much. Bye.
Sharpe Minds is produced and hosted by Michael LaFata and directed and edited by Alex Weimer. Our music is made by Tony Sapiato and licensed through Soundstripe. Michael LaFata, Financial Advisor, Archstone Financial, 508-453-9800, 324 Grove Street, Worcester, Massachusetts, 01605. Securities and advisory services are offered through Cetera Advisor Networks LLC, member FINRA, SIPC, a broker, dealer, and registered investment advisor. Cetera is under separate ownership from any other named entity. Archstone Financial is not a subsidiary nor controlled by Cetera Wealth Partners. The views stated in this podcast are not necessarily the opinion of Cetera Advisor Networks LLC and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Due to volatility within the markets mentioned, opinions are subject to change without notice. Information is based on sources believed to be reliable, however, their accuracy or completeness cannot be guaranteed. Past performance does not guarantee future results. The guest speaker interviewed in this podcast is not affiliated with or registered with Cetera Advisor Networks LLC. Any information provided by them is in no way related to Cetera Advisor Networks LLC or its registered representatives. Exchange-traded funds are sold only by prospectus. Please consider the investment objectives, risks, charges, and expenses carefully before investing. The prospectus contains this and other information about the investment company can be obtained from your financial professional. Be sure to read the prospectus carefully before deciding whether or not to invest. Investors cannot invest directly in indexes. The performance of any index is not indicative of the performance of any investment and does not take into account the effects of inflation and the fees of expenses associated with investing. Cryptocurrencies, digital assets, and other blockchain-related technologies such as Bitcoin, Ethereum, NFTs, and others are not securities, not regulated, and not approved products offered by Cetera Advisor Networks LLC. And cryptocurrencies or other blockchain-related non-security products cannot be recommended, offered, or held by the firm. Any information provided in this linked prospectus material is in no way related to Cetera Advisor Networks LLC or its registered representatives.